Morning. Um, I'm not at my place. I'm the first place, so I'm not at my studio. So permit me to speak with the light. Let's focus on the chats. All we have on the chats. So you can hear me. You can see my screen. Please signify. You can hear me. You can see my screen. Signify. Okay. Signify if you can hear me. You can see my screen. I think I can hear myself. Okay. Okay. Perfect. So welcome to Pre-London live market analysis. Um, like I said earlier on the groups, welcome to like like I said earlier on the groups, this is not a class per se. This is a live market analysis where we come to prepare for the London session as it approaches. So as a day trader and as a scalper, you are expected to pay attention to sessions. We have the Asian session, the London session, and the New York session. As a day trader or a scalper, your edge is paying attention to the session of the day. Very important. So before we continue or we start our analysis, I would want us to build a foundation for our psychology. So every trading window you come into, I want to spend the first 2 3 minutes speaking to yourself. We call it self-talk. Okay, before you come into any trading window, before you place any trade, I want you to speak to yourself. What are the things you want to see in your trading? Okay, for me, I do this aspect of my trading, the psychology parts. Okay, it is not this is not religion. This is spirituality because even trading is spiritual, right? So we are going to spend the next 2 3 minutes giving ourselves some self-talk. All right, write on the chat box what you want to see in your trading. Okay, trading self-talk. In the first 2 3 minutes, write on the chat box what you want to see in your trading. For me, you can do it as I am a consistently profitable. This is general self-talk we tell ourselves. I am a consistently profitable trader. I am a consistently profitable trader. I am a consistently profitable trader. Right? I am a disciplined trader. I am a disciplined trader. I am a patient trader. I am a patient trader. Okay? I am a confident trader. I am a confident trader. Okay? So the goal of trading is consistent profitability. Simple. Okay? The goal, why are you trading? It's because you want to be consistently profitable, not just to make money. Making money, making profits is anyone can make money. You can place a trade now and make money. Tomorrow you lose it. But the ultimate goal as a trader is to attain the consistent profitability startup. So the goal of trading, and this is what brings freedom. This is what brings freedom. when you are consistently profitable. Consistent profitability. Consistent profitability. This is what you want to. When you are in this particular status, you are good to go. The goal of trading is consistent profitability. Consistent profitability. That is where you want to get to. So how do you start the process of becoming consistently profitable? By simply affirming that I am a consistently profitable trader. And as you say these words, you are attracting the relationship, the opportunities, the information, the ideas that will make you attain this goal. That will make you attain this goal. So for the next 1 minute, type on the chat box what you want to see in your trading. Everybody type, 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 type. What do you want to see in your trading? What you type in your reality as we go into the deal of the day. Type in what you want to see in your trading. I want to see myself becoming consistently profitable. I see myself becoming a confident trader. I see myself becoming patient. I see myself becoming disciplined. I see myself becoming confident. I see myself as a trader becoming resilient. All right. Okay. So let's go into what I have for today. So we are going to look at two instruments, an example. Then you type in what you want us. So let me take off all these. So the instruments we'll be analyzing this morning, we're going to be analyzing Euro USD, gold, GP USD. So you tell me the one you want us to analyze. Okay, Euro USD, gold, and GP USD. These are the instruments we'll be analyzing this morning. All right. Okay, good. Now, for the beginners in our midst, let me start by saying this. Before you apply any strategy, right, you must understand the concepts in that strategy. So I usually say where you have trading strategy, where you have trading strategy, it is because there are trading concepts already. So strategy, before you apply a strategy, you want to ask, what are the concepts in such strategy? Before you apply strategy, you want to ask what the concepts are in such strategy, because it is the understanding of the concepts that helps you to apply the strategy. I repeat, it is the understanding of the trading concepts in the strategy that helps you apply the strategy. Before you have any strategy, there are trading concepts embedded in such strategy. So I will give you an example. We have the strategy of SMC. SMC. S M C. S M C is smart money concept. Yeah. Under smart money concepts, what are the trading concepts that we are going to be looking at? Look at market structure. And when I mean market structure will imply your break of structure, your change of character. Okay. Applying SMC, you understand market structure, you need to understand market structure. Then you need to understand liquidity, liquidity. You need to understand order block. You need to understand fair value gap. You need to understand demand and supply. Okay, and so on. So the point is, for me to apply SMC strategy, these are the trading concepts that needs to be put into consideration. Okay, an example. So whatever strategy that you are using, the reason why it is difficult to be profitable in such strategy is because probably you've not yet understood or been able to spot this concept of your strategy. Okay, so note that as the first thing I want to expose you to. Understand the concept in your strategy. Can someone type that on the chat box? Understand the concept in your strategy. That's the first chat for you. Understand the concepts in your strategy, one after the other. Understand the concept in your strategy. Understand the concept in your strategy. Type that in the chat box. Understand the concepts in your strategy, one after the other. Understand the concepts in your strategy, because that is the foundation, that is the missing link that I have realized or observed, that traders don't even understand the concepts that they are using. They are just jumping into applying the strategy. Okay, they are just jumping into applying strategy. You can't jump into applying strategy if you've not yet understood the concepts individually. You can't. So that means when it comes to market structure, break of structure, and change of character, you can say confidently that I know how to spot a break of structure. I know how to spot a change of character in any time frame. When you have liquidity, you can confidently say, I know how to spot liquidity in any time frame. For your order block, you can confidently say, I know how to spot order block confidently. For your fair value gap, you can confidently say, I know how to spot fair value gap confidently, and so on and so forth. So for beginners, before you apply strategies, you are expected to understand the concepts in such strategy. Okay? So for us advisor peeps, we have a number of strategy that we use. So basically, our strategy is revolving around price action, SMC, as simple as that. So when it comes to price action, what we use here is a candlesticks is our edge. Under price action, the candlestick is our edge. Under SMC, of course, we know market structure and liquidity, demand supply, all of that. Okay. So structure, liquidity. Yeah. so on and so forth. That's what we use here. And under the price action, we have implemented a model called CRT because that has to do with candlesticks. So under price action, CRT, CIT, we implemented this module recently in our strategy. Okay, so this is wiser Paves strategy. So I'm telling you what we use. Okay, wiser Paves strategy, price action, candlesticks, CRT, CIT models, SMC, market structure, liquidity, etc. There's so many. In fact, I just recently discovered the strategy under SMC. Okay, I discovered something over the weekend under SMC. It's so beautiful how you can just, you know, develop new things in the market. I'll share it with us if time permits me today. But I want to first start making money from it before I start sharing it. I'll keep this one to myself until I start making money from it. Yeah. Okay. So moving on to the next. Let's go into the deal of the day. So let's start with Euro USD. For Euro USD, I want to have my on my daily time frame. Let's see what the market is doing. We are in the new week. Let's see what the market is doing on the daily time frame. Let's see what we have on the daily time frame. Okay. From the overall structure of the market, what can we see? From the overall structure of the market, you can see based on this daily market structure, there is a higher high, higher low, and a lower low. But this lower low, let's first mark the recent break of structure. This is the recent break of structure. Let's follow the structure of the market. The recent break of structure is here. This is the higher low that created this higher high. So we have, all right, we have, let's label higher low, and we have higher high. So this is the recent structure that has given us a range, higher low, higher high. Recent structure that has given us a range, higher low, higher high. Now when price came here, price came towards give us a lower low. Now we can't yet conclude that the market has changed until we have a new break of structure. But right now, market has given us a first signal. This is a signal that the trend wants to change because we expected this higher low not to be violated. That was the expectation. We have a break of structure. We don't expect this higher low to be what? Violated. But in this case, we saw that there was a break out of the higher low. It's a close, massive break, close, then reverse. So currently, what we have on daily time frame, we have this order block here. So if market wants to reverse, I want to see this order block on daily time frame respected. I want to see this order block, this daily order block. I want to see that daily order block respected. So we have tapped into the order block now, right? We have tapped into the order block. So I want to see this order block respected. Then to take out this liquidity. That's what I'm expecting. If that is going to hold, if this is going to hold, I expect this to happen. Right? So let me put that in the notes. If the daily order block holds, I expect the new low. I expect the new low to be taken. Okay. If the other block holds, I expect the new low to be taken. This is new high and new low. All right. 0, 1, 2, 3. New high, new low. This is what I have for this price action. Remember, our goal is not to actually predict the market per se, just to apply your knowledge on your concepts, your edge, and execute. You don't need to be right or wrong. Just apply your knowledge and execute. All right. So I'm bearish for Euro USD based on what I'm seeing. I'm bearish. So what I'll do is I drop down to a lower time frame of 1 hour and see what the market is presenting to me. Okay, I think I'm going to be bearish.